Very good morning to our RANsquawk listeners and welcome to the European Rundown for today, Friday the 15th of July. And with the ongoing debt ceiling negotiations in the US really not progressing much further at the moment, ahead of the looming August 2nd deadline, it has prompted Standard & Poor's overnight to say there is now a 1 in 2 chance of the US's AAA sovereign rating being downgraded. They put them on watch negative, which means we could well see rating actions on their rating in the next 1 to 2 months. Pretty similar to the warning which was sounded out of Moody's yesterday, so we'll keep a close eye on how those talks progress when the US come in later and as we head in toward the weekend. Meanwhile though, we have had risk-off sentiment in early European hours. We've seen some re-widening in the Italian, Spanish 10-year bond yield spreads over German bunds. This has come as the market now keenly awaits the results of the EBA's European stress tests, which most analysts are expecting roughly around 10 to 15 banks have failed, with much of the press in the week has suggested that Spanish savings banks will account for a large portion of those failures, with investors also keeping a close eye on Greece. But the actual number of 10 to 15 could well be welcomed, as the market has looked towards these tests as being more stringent as they were from last summer. In terms of the actual US session, though, a couple of key data points to keep an eye on. Industrial production, the July preliminary Michigan report as well will also be released. But we'll provide you with another updates after those stress test results are released to keep you updated. But for the time being, that's it from me. So have yourself a great trading day and a fantastic weekend.